Hi, this is Ian Gendler, Director of Research at Valueline. Today, using our digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I'm going to recommend one stock to buy right now. After the presentation, we have allotted time for questions and answers. Also, if you would like to revisit this presentation at a later date, it will be posted on valueline.com and our YouTube channel within the next 48 hours. For those joining us for the first time, I want to provide a brief overview of who we are at Valueline. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the Valueline Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that are traded on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by Valueline's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Valueline has no investment banking business with any company, including the 1,700 that are included in this service. Valueline does not execute trades for subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. As part of the formal presentation, I feel it is important to start with an update on the current economic environment. This content was created by Harvey Katz, Valueline's chief economist. Signs of an economic slowdown are proliferating. Specifically, recent weeks have seen modest declines from cyclical highs in housing starts, a slight drop in existing home sales, a sudden reversal in industrial production, spurred by softer global growth and continuing trade frictions with China, a listless reading in the leading indicators, and a pullback in retail spending. This latter decline, perhaps the most worrisome in this group, reflected lower sales at building materials retailers, department stores, and over the internet. This overall deceleration in business activity suggests that GDP growth, which was nearly 3% in 2018 and more than 2% in the first half of this year, will average 1.5% to 2% at best over the next year or so. Such cautionary observations aside, the case for a recession is still rather weak, primarily because the sluggishness cited above was off generally elevated levels of activity. Further, such growth may not waver much in the months to come. Our cautious optimism reflects the fact that lower interest rates, mostly stable real estate values, and high equity prices are likely to keep consumers from holding on to their wallets too tightly for now. Meanwhile, things are less reassuring overseas, where international relations are eroding on multiple fronts, most notably in the strife-torn Middle East. Unfortunately, instability is likely to remain the rule there. Then there is a slowdown in global growth, particularly in China, where the rate of improvement is easing rapidly. To date, such headwinds and the ongoing Brexit drama have had little effect on our outlook, but this could change at any point. Global trade is a big part of the international story. There, our standoff with China remains unresolved. That's even as both sides voice periodic optimism that a limited arrangement will be forged fairly soon. A longer-term understanding may be put off until after next year's U.S. elections. Through it all, the bulls are holding their own, with generally more strength than weakness in daily market action, buoyed, in part, by a generally supportive third-quarter earnings reporting season. In conclusion, we give the edge to the bulls, believing that investors should remain committed to quality equities that are being underpinned by mostly solid earnings. We can use Harvey's comments and outlook to create an investment strategy. Thankfully, Value Line provides the tools to put this in action, which I will demonstrate when I go to the screener. Before we formally start our search, please note that I'm already signed in as a subscriber and on the Value Line dashboard. From here, I can access all of the products via the quick links, as well as daily market commentaries, economic information, as well as general interest articles written by our analyst team. Since we're in the heart of earnings season, we publish free reports on the Dow 30 as well. Later today, Apple will announce, and we invite everyone to review our analysis, which will be posted shortly thereafter. Let's now start our search for worthwhile investment candidates. For this, I'm going to head to the screener, which can be accessed via the Find Ideas tab. Subscribers have access to more than a dozen preset screens, as well as 50 fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher level subscriptions. For today's search, let's focus on several details that Harvey mentioned in his report. To repeat his conclusion, investors should remain committed to quality equities that are being underpinned by mostly solid earnings. First, let's address quality. While we are bullish in regard to the market over the near term, there are certainly a number of concerns, including trade, economic conditions, etc. Thus, I'm going to weed out risky equities so that we can indeed focus on quality. There are loads of risk measures out there, and that Value Line offers, and I'm going to focus on our time-tested safety ranks. The safety ranks measure the total risk of a stock and are arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. They also meaningfully participate in up markets. For more information, I encourage you to peruse our ranking system guide, which is available free of charge from within the investment education section of our website. So I click on the safety rank field, and I'm going to focus on the 1s and the 2s. These are the most financially sound companies that we track, and their stocks have a history of relative stability. As you can see, only 463 stocks in our database of more than 5,800 are ranked highly for safety. I now want to make sure our candidates have been successful growing profits, and will utilize the EPS growth 5-year field. I'm going to set the low threshold to 12%. So these companies have been able to advance profits, on average, by at least 12% over the past 5 years. Historical growth is important, but I also want to make sure that the companies are positioned to continue to perform well. This is where Value Line's 3 to 5 year projections are particularly useful. This is a good time to mention that Value Line is one of very few research houses that provide financial projections out 3 to 5 years. We think that these estimates are of great value to our subscribers since they show a long-term trajectory of the company. And I'm going to also set the low end to 12%. All right, down to 28 results. We're getting close. For the last field, it makes sense to focus on the stock and its probable performance going forward. The trusty Value Line timeliness ranks can be utilized here. Like safety, the ranks range from 1, highest, to 5, lowest. Although the calculation is purely quantitative and proprietary, I can tell you that it includes a number of variables, including stock price momentum and earnings results. So click on the field, and I'm going to select the 1s. since those are expected to be the top performers over the next 6 to 12 months. Once again, more information is available in our ranking system guide. Down to just 7 results, which is nice and manageable. All of these stocks may fit nicely in a portfolio that values quality and risk-adjusted near-term upside. I personally evaluated these stocks earlier today, and following my research, I have decided that Copart, ticker CPRT, is today's one stock to buy right now. Before I provide more information about Copart, please note that screens can be saved and revisited later by utilizing the button at the top. Clicking on the company name will open the digital report, where the information and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, or hidden, so you can create your own customized report. Once you alter the presentation to your liking, you can save the changes from the sliding horizontal action bar. The next time you come to this stock, it will look the way you set it up, and changes can be used for other stocks as well. I don't consider Copart to be a household name, so let's first get some background information in regard to the company. This is available via the business description module. Copart is a leading provider of online auto auctions and vehicle remarketing services in the U.S. and internationally. It acts as the intermediary between sellers, primarily insurance companies, and buyers, dismantlers, used car dealers, and/or exporters. Importantly, the company generates more than 80% of its revenues from within the United States, so it will likely remain well insulated from trade and tariff standoffs. Admittedly, this is one of the reasons why I chose this stock over the 6 others. Lastly, Copart has about 7,000 employees and a market capitalization of almost $20 billion. Moving on, our digital reports possess a great deal of information and analysis, so let's take some time to look at details about Copart. I want to start with the score ratings box. All 3 of these proprietary scores are unique to ValueLine. They are also all on a 0 to 100 scale, with 50 being average. Definitions for all 3 can be found in the module. In short, Copart scores are well across the board, which is nice to see. One thing that caught my eye was Copart's performance relative to its peers. I'm referring to the stock, and this is displayed in the total return module. As you can see, CPRT has been a stellar performer and has easily outpaced its industry neighbors as well as the ValueLine universe. Moving to the valuation module, we see Copart's historical annual performances as well as ValueLine's estimates for this year. Copart's fiscal years end July 31st. A quick scan reveals that CPRT should continue to increase revenues, earnings, cash flow, and other valuation metrics at good clips. Clearly, from a numbers standpoint, there's a lot to like here, and I encourage interested investors to review the many other modules that we provide. I now want to highlight our classic PDF reports, which are available for all digital subscribers. They are available using the button on the top right. Let's take a look at the last report, which just came out. And let's see what the analyst has to say in the commentary. Many subscribers consider this the most important part of our reports. Senior analyst Emma Jalil stated the following in her recent update. Copart will probably enjoy solid near-term bottom line gains. For fiscal 2020, share net may increase at a double-digit pace to around $2.65. The company receives about 80% of its vehicles from insurance companies. Most of these autos are irreparable and sold to dismantlers or rebuilders. Meanwhile, recovered, stolen, and slightly damaged vehicles are bought by used auto dealers. Modern vehicles are loaded with sophisticated technology, and repairing them usually isn't cost efficient. Thus, these are sent to the auction market. Furthermore, people are staying longer with their aging vehicles, which results in total loss after the car is involved in an accident. Distracted driving due to the use of mobile phones has also increased the severity and frequency of accidents. We think these trends should continue to play in the company's favor and keep operations healthy, bolstering both the top and bottom lines in the short run. As for the stock, we think it is a standout for the short term. As mentioned earlier, it is top ranked for timeliness. Its 18-month statistics are also favorable, which are right here on the top left. This is a good time to mention this new value line feature. The 18-month target price range, as the name suggests, seeks to predict the stock's price over an 18-month horizon in terms of a range. In addition to the high and low values of the range, the percentage difference between the current stock price and the midpoint of the range is provided. The percentage may be thought of as the most likely potential profit. The larger the percentage, the greater the price appreciation. For Copart specifically, it's 20% in this report. However, I believe it's been updated to 15 now. But either way suggests ample appreciation over the next year and a half. Simply put, Copart looks like a standout for the next several months, and it is today's one stock to buy right now. This marks the end of the formal presentation, and I will now tackle your questions. All right, so please give me a moment. Several questions came in. Here's one question about the portfolio tracker. Yes, I'm aware that the edit function is malfunctioning, and it is being looked at. I do not have a time frame as to when that will be remedied, though. What are the current thoughts of PGR and Argo? PGR is progressive. These are the two stocks that I've recently recommended in webinars. They're the last two. Admittedly, these are not two stocks that I personally track, but I still do think that they offer meaningful investment merit over the next several months. So they would still be buys in my book. I only see the trailing PE ratio on the company sheet. Where is the best to find your proprietary current PE ratio? Okay, a couple places. One, the PE ratio at the top of our one-page PDFs is always the current PE. This figure is also in the screener. So for instance, if you wanted to run a screen on current PE, and it's also in the weekly summary index, which gets updated, as mentioned, weekly. That's the current PE for all 1,700 stocks. Here's one question about buying and selling. So for these webinars, I do recommend a stock each month, but I don't follow up with sell recommendations. However, we have a number of products that do. For this product, for instance, you can look at the ranks, look at the analyst commentary. That will usually provide triggers on when to sell. We have model portfolios that are actively managed, updated weekly, or updated continuously that provide sell recommendations, and those recommendations come via email or phone message. I'm referring to our monthly stock selection services like Value Line Select and Dividend Income and Growth, to name two. So Value Line provides everything an investor would need to build, manage, and maintain a portfolio. Explain again how you decided on CPRT. Well, one thing I mentioned in the presentation was that the vast majority of their sales are domestic. I personally can't tell you how the global economy is going to fare over the months and years ahead. I'm not an expert on Middle East relations or whether the US and China are going to come to an accord at some point on trade. So I like the idea of focusing on a stock that takes just about all of that out of the equation. Other things I liked was, as I mentioned, the stock has done incredibly well, and I think it still has more room to run. And that shows by the rank and the 18-month figures. So CPRT had a lot of things that set it apart. Next question. What type of alerts can be set up with Value Line? Well, for that, let's go to the Alerts hub. So as a test drive, we may as well just add an alert for CPRT. So you have three sets of categories. So for price and volume, you can set up these alerts. You know, if the stock falls by X%, goes up by X%, a volume spike. Whenever value line changes a rank or a rating. So for instance, Copart is ranked 1 for timeliness. Since it can only now go down from here, you might want to know when it moves to a 2. And then for analyst updates, when we put out a new report or when we put out a supplementary report, which is a shorter report, which is written when something meaningful occurs. Company reports earnings, company reports an acquisition, a CEO change, anything like that. Here's a question. Should dividends play a higher role in stock selection given these volatile international market environment? I don't think it's necessary, but it could. Looking for stocks that pay meaningful dividends, I would qualify as usually not a bad thing. I just didn't include it today. By running a screen and putting dividend yield as a requirement, we'll get you a different list of stocks, but by no means would that be a poor idea, a poor list of stocks or anything like that. Is this recommendation leaked ahead of the webinar? How long after the webinar does the public know? No. CPRT was not part of any kind of press release, or I didn't give an interview to Politico before this webinar. You heard it first. As far as when the public knows, this presentation will be posted free of charge on our website and on YouTube within the next 48 hours. So you guys get the first jump. Let me see if there's any more questions. Just bear with me for a sec. Here's a question about technical rank. What role does it play in evaluation? So technical rank is one of our other proprietary metrics. Take a look at Copart, and you can see that right now it's a 3, which is neutral. It's an important factor to look at. It's just one that I didn't highlight today. That is a shorter term rank. It's to show which stocks we think are going to perform well over the next 3 to 6 months. And the calculation for it uses all different stock price lengths, intervals. So it's purely a price-based ranking. What is the quantity of screening options that can be used at a time? I assume that means how many fields can be utilized at one time? There is no limit, but obviously as you add more and more fields, you're going to run out of candidates fairly quickly. From my experience with our screener, once you get past half a dozen fields, you've typically whittled it down to quite a small number. For today, for instance, I used 4 fields and got to 7 candidates pretty quickly. I don't think you'd really have to use more than 6 fields very often, but that is personal preference. How do you see next year's elections affecting the market? Sorry, but I have to take a pass on that. I think it's way too early to tell. We don't even know who the candidate is going to be on one side. And some people don't believe that President Trump is going to be on the ticket in a year. So I think it's way too early to say anything definitive. For data reports, how can I easily find supplementary reports? Sure. So there's a couple ways. First off, if we go to the dashboard, on the quick links box is a section on supplementary reports. Here are all of the supplements we've written over the past few days. So today is October 30th. As you can see, we've been pretty busy today. And yesterday was even more busy. If you go to an individual stock, so if we go back to CPRT, you'll see that there were a few supplements written, and nothing yet this year. But if we go to, and I personally cover Boeing, so you can imagine I've been busy. These little bulletins with VL are the supplementary reports. Here's a question. I purchased CVS from a previous session. What is it currently ranked? The ranks on CVS are for subscribers only. So I recommend signing in and looking at our most recent rankings. In regard to the alerts, yeah, the max is 25 alerts per subscriber. There's a couple questions about subscription pricing. I'm unfortunately not in the sales department. For questions like that, I recommend calling 1-800-VALUE-LINE. Here's a question about interest rates. You may have heard just a few minutes ago, the Fed announced another quarter point reduction, but didn't seem to commit to any further decreases. What criteria do you use to add a stock into the VL universe? All right, so I personally choose the stocks that we add to the 1700 value line stocks. We're, of course, always losing stocks to acquisition, delistment, bankruptcy, etc. So we're always adding. For instance, we added Fox Corp this past week and a couple other high-profile companies. So the criteria I typically use, admittedly, it's pretty broad. Trading volume and market cap are the most important two things I look at. The more shares that are traded, the more investors are interested. It shows interest. And then, of course, I want to add the biggest companies by market cap. But I also look at profitability, investor suitability. I do want stocks that should appeal to a large number of investors. So going back to dividends, companies that have high dividend yields that appear stable, I like to add. And then, of course, float, which is also very important. There has to be enough shares out there for if we recommend it or recommend to sell, people need to be able to get in and out. How do you access the valuation module? So from any digital report, so I'm on Boeing now, but the valuation module is right here, and you can expand it to take a look. All right, here's a question about good timeliness ratings and have 18-month projections that are negative, and then the opposite is also true. So that does tend to happen. A stock may be favorably ranked for timeliness, but have a lackluster 18-month projection, or vice versa. They're two completely different calculations, so they don't always line up. For Copart, for instance, though it did, it really depends on what kind of investor you are and which one you should consider, I guess, over the other. Timeliness value line has, of course, been putting out for decades. The 18-month is new. Remember that the 18-month, it's a range with a high and a low. So just because the projection might be low or negative, that doesn't mean the stock doesn't have room to run to the high end. So I wouldn't say that they always contradict. It's just that the projection might not be, the projection to the midpoint might not be positive, but there may be additional upside in the range. Do subscribers to the print edition of Value Line receive access to the digital site? It depends on the product, but for the Value Line Investment Survey, print subscribers do not get digital access, but we do sell combo subscriptions. So if you're currently a print subscriber and want digital access, which I recommend because we provide a whole lot more information online, you can call 1-800-VALUE-LINE to speak to a sales rep. Have you considered an article discussing tax-advantaged investing for more senior citizens like I? We tend to focus, at least on the product I'm talking about today, on individual stocks. But we do have some other offerings and maybe future offerings that might tackle more retirement type topics. So I would look out for that in the future. What's VL's position on using GAAP versus non-GAAP? This is referring to how companies report their earnings. We try to use GAAP whenever possible. However, with a lot of companies, some particular industries, that's not possible. So we'll use non-GAAP in that way, in those cases. For instance, we typically will remove non-recurring gains or losses, discontinued operations, things like that. For insurance companies, we take out investment gains or losses and just show earnings on for their business, not their investing skills. This provides a more accurate display of a company's true performance. There's exceptions to that. For instance, for Berkshire Hathaway, we do include their investment gains because their stock portfolio is so large. So we try to use GAAP whenever possible, but there are a lot of caveats to that. Would you vary the 12% EPS growth screen based on market conditions? That's referring to the screen I did today, and I used 12% for the historical 5-year growth and the 3 to 5 year projection. Of course. Remember, I'm trying to find a worthwhile group of stocks and whittling down our whole database to a manageable number pretty quickly. Last month, I believe I did a similar screen and I used 15%. So I'm always rejiggering the percentages depending on what our projections and history look like. How important is industry rank overall versus concentrating on a single stock regardless of industry rank? Well, to tell you the truth, it's worthwhile looking at both, but I think the individual stocks rank should hold more sway. Are you considering any other model portfolios, perhaps based on the approximate age of the subscriber? Well, we're always looking to add new model portfolios. For instance, just this month, we added a new one in our Fund Advisor product. The Fund Advisor Plus offering focuses on mutual funds, and we provide data and analysis on 20,000 plus funds. However, we did notice that most of our subscribers, and I think most investors that have mutual funds these days, also own ETFs. So in that product, we just added a new portfolio based on ETFs. And a lot of our portfolios all have different strategies and then thus suit different investor classes. And we have several portfolios that I would consider to be conservative that would certainly fit for, let's say, an investor in retirement or close to it. As far as adding more, if we have some more good ideas, then sure. There's a lot of questions about Progressive. I suggest checking out our most recent Progressive report and our ongoing analysis. We'll be here all day if I'm just going to look at individual stocks. So I apologize, but all of our information on Progressive is available in our products. I'm going to stop there. I know there's several other questions. If you'd like to email me directly with these questions, you can, and I will answer them as best I can. My email address is igendler@valueline.com. That's igendler@valueline.com. I want to thank everybody for participating today, and I guess have a great Halloween. All right, take care.